Good morning to the MMTs, and good morning to all people who have been involved in markets back when the day trading boom started in the 90s, and then we had the early year 2000 part of the decade. But we had where high frequency models and trading computing machines have overtaken the marketplace. We are here and we are proud to announce that there is going to be a hearing and that the regulators are going to look into the unfair advantages that you people have. And it's not fair. And we've been an advocate to try to help people understand that there are high algorithmic computing systems, and it's where the top 1% steal from the 99% using advanced technologies and high frequency algorithms designed to take money away from the retail investment community. StockMarketFunding.com comes from the very, very, very old days. And over the last 30 years, we've seen everything from black boxes, but most importantly is as the technology has changed our world, the advanced part of the technology is where you do not get the fair practice of buying and selling on an intraday level. And that the way that they run these prices, if you can understand it, we built a platform called the MMT platform, which is something, this is the MMT platform. And it's all mathematically coded. And all of these diamonds that you see here track these high frequency robots and their behavior in the buy and sell script. And everything behind here mathematically, whether it's positive or negative in our system, is we spent our whole life continuously updating this system on a daily level. And what I'm saying is that within the middle part of a bid and ask script, right here, they quote jam, they do lots of different things, they front run your orders ahead of you. People that use traditional, if you're not direct to the market, but say you got a TD, Ameritrade account, or a Schwab, or whatever, your order execution routing to the market is totally not up to par, meaning that we're direct to the floor. So we have our own algorithms that we can deal with them, but we have a system that tells us exactly what these high frequency machines are doing. And these diamonds right here are alerts to the price behavior of those machines. One of the things that we would like to point out is that you haven't been treated fairly. And it's not like the old days where you could get in there and do a lot of stuff. These high frequency programs, if you know which way they're going to work, you can really profit. And if you know how they operate, you can get limit orders below the market. You can get sell orders above the market before they make their moves one way or the other. Now, a lot of people use high frequency servers is what I call them. They pay like 10, 15 grand a month. Then they have other various programs that are injected in there. So once again, the Securities and Exchange Commission needs to make it where that this is a fair playing field for everyone. And in the old days, like on NYSE floor traders, they used to front run stocks. These machines will front run these stocks. Now, we'll show you how to take advantage of it. But what we're saying is that we hope that something good will come out of these hearings that's going to be looked at. Meaning that people are going to take it up there. There's a major whistleblower. There's a major whistleblower about these high frequencies. Now, you got to remember that StockMarketFunding.com has been talking about this for years and teaching all its market makers here at StockMarketFunding.com and regular new people how to take advantage of high frequency. And look at a market maker, our platform, and what we can teach you how to do is get in front of the 1% that are stealing from the 99%. Whether you're going long or short or using options. There is a high frequency options trading courses that we have, but high frequency in the option pit is just like the equity pit called stocks. and then options are options in that pit. But there's a correlation between how these bid and ask work. And what has happened is that the day trader, the mom and pop who want to get in here and buy and sell, and they want to do things on an intraday level, going long, going short, using options all the way around, you don't have a fair playing field. And we spend every day of our life trying to bust the new little gimmicks that come in here. And why does the U.S. exchange model, NYSE, Nasdaq, or any of the rest of them, let this stuff continue to happen? It's not fair. People can argue all they want. It is not fair. The regular individual is not getting the fair bid and ask. Quote jamming, all kinds of things go on in here that never had gone in before. And basically what these high-frequency computing algorithms have done, which they have the upper advantage over you, is it's driven the day trader out. And it has. And these machines can work on people's human emotions. And right now, it's not machine versus human, it's machine versus machine, because they compete with each other. Let Knight Capital be an example. They were using high frequency. It went renegade. Every flash crash we've ever had, it's because during the progressive state of these high frequency algorithmatic programs have increased progressively. And what happens is they'll wind these prices all the way up to the moon, and then that's where you got the flash crash in 2010. That's why they came up with stock circuit breakers, because when these programs run renegade like it did with BATS, it's an ECN, another thing they need to do is remove the liquidity in the ECN. These high frequency algorithmatic programs, they make so much money from an ECN like Island or Knight or BATS, they get a rebate. And they can buy these things within pennies and jam the quotes in here, put good till cancel orders, line the bid to try to keep it propped. Now, there's a way to take advantage of it all. But how would anyone ever know that? How would you ever know that? You're not going to know that. You're not trained in to know that. You don't know how those systems were built. We do. And we beat them with limit orders all the time. And we steal their orders from them and put that in our advantage because we understand how that works. And the only reason why is because we have a very mathematically coded system that tracks these bots. That's what these diamond alerts are here now. And, you know, when you get down to the bottom, you can tell when that bot's working because these diamonds are ascending. When you're way down here and you pop right up there, there was a frequency program that does these things, and they get up. And what has happened in the broader markets throughout the summer and through right now is most people are on the sideline and missing the bull rally because there's a big disconnect between the fundamentals and the economy and lots of things. But what I will tell my friends, we are here behind you, and we hope that the whistleblower that's got the hearings coming up, that the whistleblower was probably someone who came from stockmarketfunding.com and got their attention. And back in the old days, there was rules about the bid, the ask, the penny spread increments, lots of things that were there to give the retail investor an equal opportunity on an intraday level and making a market and competing. Whereas today, some of the volatility that these high frequency models put out, it's almost impossible for a human to absorb that emotionally. And we're behind you, and we'll be updating it. And like I said, it's something that we feel that we know how to get in front of the 1% that steals from the 99%. And we do. And we spend our life doing it. We spend every waking hour during markets. We're constantly back testing. We know exactly what's going on in there. And we would more than be willing to help you understand it as well. And the public, you got to remember that everyone is trying to get the edge all the time. And these people have the edge. They do not deserve the right to have any more of an edge when it comes to buying and selling stocks intraday It should all be equal, fair, and balanced as it always was. I remember when Levitz was back in the NYSE, he was always for the retail investor. And when direct access trading first came to the marketplace back in the 90s, we've been around a long, long time. It's gone from the black box days, which was a billion-dollar-a-year industry, and everyone is trying to get an advantage. Well, I can tell you what, Mr. Regulator, it's time for you to get in here and help these people and give them the fair bid and ask and give them the right programs that can be used for the retail day trader, and let them have a fair advantage and let these machines get shut down. Let's go back to the old ways where it was fair for everyone in the bid and ask ranges on an intraday level. So therefore, we will keep updating people on what those high-frequency hearings will be before the committee today. There was a major whistleblower that's starting to blow the whistle. We've been telling people it. And you know what? I would blow the whistle all day because I don't like how you're being treated unfairly.